The trade desk stock is now down over 57% year to date in 2025. And because of the price action compared to company performance, I'm going to make a prediction about trade desk stock, something that I think the management team is going to do as a result of this declining stock price. I'm going to share with you some of the details of its latest quarterly performance and make my prediction for what I think trade desk management will do to respond to this price action. And it's going to be pretty interesting, so you're going to want to stay tuned. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. So, in its latest quarter, which was Q2 2025, when the management team reported their financial results, the stock price crashed following the release. It fell more than or roughly 40%. But the company reported 694 million in revenue, representing 19% year-over-year growth, with profits also expanding. So typically you don't see a company stock price falling by this much with this kind of performance. And some of the price action had to do with what investors were anticipating from the company in future years and future quarters. And so that had a lot to do with the stock price decline. But the actual performance so far isn't showing big signs of being a business that's in such a situation to deserve this kind of a price drop. They also generated 271 million in adjusted EBITDA, or about 39% of revenue. And these are good margins for a growth company in the early stages of development. An EBITDA margin or adjusted EBITDA margin of 39% is a strong margin. And at the same time, the company is still growing revenue around 15 to 20%, which should help improve those margins further still. Furthermore, the markets the company operates inside are still expanding. For instance, connected TV represents a high 40% share of their overall business. Now, this is the category that's under biggest risk because of Amazon's decision about its own inventory and partnering with Roku, and that could threaten some of the share the trade desk has in this category. But the overall size of the pie is increasing so substantially that there's still growth to be had. For instance, ESPN is about to launch from Disney, and that's going to have a meaningful impact on consumer behavior, shifting from linear TV, satellite, and cable TV, switching over to streaming instead. Many of the people, many of the millions of people that still have a cable and satellite subscription have that because that's the best way you can watch sports right now. But increasingly so, it's becoming less and less. And with the launch of ESPN, the flagship sports service that has sports from the NBA, MLB, the NFL, Formula One, if you're a fan of Formula One like I am, this is something that was stopping people from switching to streaming completely and still holding on to legacy methods. And so that's going to create a nice big increase in the overall size of the streaming TV market. Even though I do acknowledge that the decisions from Amazon will hurt the trade desk stock, the trade desk opportunity in the longer run. But overall, in the longer run, the market is going to increase so substantially that there's a big area of opportunity. Remember, the advertising industry is a roughly $1 trillion industry that will likely grow for eternity. This is one of, I think, the only categories I can say that about. Advertising will grow into eternity because so much of our economy is based on advertising. I don't think advertising will go anywhere but up. Now, in short periods during recessions, there may be a decline in overall advertising spending. But I'm talking longer periods. If you look at any 10-year block or any 20-year block, the advertising industry will likely increase in every 20-year block from now into eternity. And that overall growing market means a greater pie for everyone to split, even if the trade desk now expects a smaller share of that overall pie in the long run. The trade desk still is heavily weighted in North America with 86% of its revenue from this region. compared to 14, and international only 14%. Even though the overall advertising industry is more evenly split, and even more so perhaps outside of North America. But the trade desk still is concentrated in North America. There's an opportunity for the company to expand in those regions as well. So now we're getting to the part where I make my prediction. And it has to do with what management said. So the management said they have about $1.7 billion in cash and equivalents and short-term investments at the end of the second quarter. They have a pristine balance sheet with very little or no debt. And the management team said, given our strong balance sheet and consistent cash flow, we plan to continue opportunistic share repurchases. This is where the company uses their cash, which they have about 1.7 billion, and goes and buys their stock. And when they do that, it reduces the number of shares outstanding, which then leaves a greater value for existing shareholders. So it has the effect of lifting the share price because there are fewer shares outstanding. So the existing profits are split among fewer shareholders. And you can see in my proprietary discounted cash flow valuation model that the number of shares is one of the inputs, right? I take the value of equity here, $31.271 trillion of value of equity, or billion dollars, I should say, not trillion dollars. My apologies. And I divide that with the number of shares outstanding to come up with the intrinsic value per share for the trade desk stock, which, by the way, is roughly 40% undervalued according to my calculations. So if you have a smaller number of shares outstanding, then this value of equity will be split among fewer shares, thereby creating a higher value per share. So my prediction is that the management team will be using significant sums of its cash to buy back more shares, given that the stock price is down by so much and the stock is so undervalued. Whether I look at valuation on my whether I look at valuation on my DCF model, or whether I go and look at the forward price to earnings ratio, which right now is trading at a forward PE of 29, near the lowest the stock has traded for, going all the way back to 2018. This is almost the cheapest you've ever been able to buy the trade desk stock. Certainly the cheapest you've been able to buy with the company with this level of prospects in terms of revenue and cash flow and product enhancement, etc. So I see this as a great value. And understandably, I think the management team recognizes that the stock is a great value. And given that it's a relatively asset-light business model, they don't need so much cash to reinvest in the business. I think one of the primary things they're going to do is buy back a lot more of their stock. And I wouldn't be surprised, and this is my prediction, over the next few weeks, you're going to hear an announcement from the trade desk management team signaling a huge increase in their share buyback program. Or maybe you won't hear an announcement, but just in the next quarterly update, you see the company just casually mention that, oh, by the way, we bought back all of these shares of our stock over the previous 3 months because we saw this as being significantly undervalued. And that brings me to another interesting statement here. When management teams or when people really believe that something is undervalued, they're not going to go around hyping it up, right? Now, you might be saying, well, why am I saying that the stock is undervalued? Shouldn't I be going out and buying the stock instead of telling everyone that it's undervalued? And am I not missing that opportunity? And I'm different than a management team because I don't have enough money where my purchases will change the price of the stock. Even if I use every dollar at my disposal and buy shares of the trade desk stock, I'm not going to move the share price, okay? But if the management team goes out and spends $1 billion buying back their stock, that's going to move the share price. So if I'm a management team and I want to buy back shares of my company at a lower price, I'm not going to go around bragging about how undervalued I think my business is, or how I think my business is going to be worth trillions of dollars in the long run. I'm not going to be doing any of that. I'm just going to go out and quietly buy shares of this stock at these low prices. And then when I've accumulated all the shares I want to accumulate, then I can start talking about how great I think my company is. And that's something that I think investors get the opposite perception of when they hear management teams like Tesla going out and bragging every other day about how their company is going to be a $10 trillion company and the most valuable company in the world, while at the same time, they're not using any of their money to buy back stock. And in fact, the management team is consistently selling shares of Tesla stock so that they can invest in other companies and other things. You should take that as a signal that the management team doesn't really believe that those shares are undervalued, because if they did, they would be just quietly buying the stock instead of going out and trying to get you to buy the stock. It's just another investing idea I wanted to share with you. It doesn't just apply to the trade desk, but it applies to all management teams and all investors that have the kind of money where their purchases can influence the share price. If they're going out and telling you that they think the shares are undervalued and you should go out and buy it, and if it's somebody that has that kind of purchasing power, then it likely means that they're finished buying the shares that they want to buy, and they're trying to get you to buy it so that they can sell you their shares. That's just my opinions on the subject. So that's my prediction for Trade Desk. I really think the management team is going to go out and buy a lot of stock, and they're going to use the capital at their disposal, the $1.7 billion in cash. And, they generate roughly $250 million every quarter in free cash flow that they can also use to buy back shares. So I think they will do that. I think they will be buying a lot of stock. By the way, this document I'm reading from is the company's latest earnings call transcript. I've made this available for my channel members, and you can see the link in the description below to learn a lot more about all of the benefits we offer as a channel member, and you can join for less than $5 a month. Talk about an undervalued investment. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.